In-depth analysis of Tesla setup as of October 24th, 2022, bear traps. Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well. This is Dan Max at eXp Realty, aka the Trading Agent. I want to do a little in-depth analysis on Tesla today as of October 24th, 2022. Call a bear trap. Want to get into it because I think a lot of people may, see this formation at some other point, how to interact with it, what to expect, how to set your stops, just how to be thoughtful of the process. Again, if you are newer to the channel, we're always providing live daily market recaps, videos of all sorts of setups, formations, trying to keep you up to date with what's going on in the market. If you've been following for a while, I want to get in the Discord room, DM me on Twitter for a link. I've closed the room up because it got a little too crazy with people coming in there and asking tons of questions and pretending that I have the answer to every question. Unfortunately, I don't. No one does. And this is kind of a buy yourself thing. I should appreciate the support, love, and donations for, the education that I think people are getting for on the cheap, which is great. Again, smart man learns from his mistakes. The wise man learns from others. I want to talk about Tesla today because it's one of those stocks, the market, again, I've said I think the market's going higher near term. Watch for commodities. Again, apologize for the congestion. Watch commodities, how they react. But even junky tech, I think it has a pop in it. And so what I want to talk about is bear traps. How do you identify them? What do you look for? And how do you trade around them? So when you look at Tesla, first of all, you need to look at the point of controls in swing points. Will we not agree this low 205 area is important, like 205 and below? So you notice this area. Notice it was at the highs, there was a chop, a reference area. Again, we talk about points of control, support, resistance. If you're not familiar with it, please watch the videos on it. Again, every topic has a video about it. And so you can start to really see these things kind of play out. And one of the things that we always talk about, again, retest. There's a whole video on that, how retests work and what to look for. All right, trap. If you know the market is potentially trending up, which, again, is not the consensus. I know that, but I think it is because of everyone's bearishness. If you're watching this level and you know in your mind, all right, if I start buying it at 205 and lower, 206, whatever you did, keep this in mind. We bought this last week. If you took a little off, not a problem. If you got stopped out, now here's where the issue is. You want to stop out approximately where you got in or not too far below, which we did. We stopped out at like 201. Again, made some money on the upside, sold a little for a stop loss. And here was the trade though. You can see it here now, that reference, right? We got below the earnings low. Keep in mind, this was the earnings date, 202. Now I want to show you guys the intraday charts, because I think this is where it gets a little more interessante. So you can see we're at about, rubber band man theory. If you're not familiar with this, I probably need to do another video on this. Bigger moves at the beginning and then choppier action before a trend change. Well, notice you have your lows. All you needed to see was this candle on the hourly. A doji. Again, if you don't know what a doji is, there's a video on this. Back to basics. Indecision with big volume. When you break lows, you want red candles, thick, big red candles, that continuation patterns. You never want to see a doji. Or, again, because a doji actually certifies the trap. Because if the market is going to take a name lower, shouldn't this just go lower? I mean, essentially, shouldn't it break below it? Volume increase. Remember, volume is demand. No. Instead, somebody was supporting the market. Wasn't you, wasn't me, wasn't the people on the Discord room that had the volume to do this. It's the market makers. They set the traps. And the irony is they went to 198.56. But check this out when you get even zoomed even more in on the 10-minute chart. Zoomed more in. Is that a right word? Similar kind of formation. Long wicks at the open. You go below 200, and it only lasts for about 15 minutes. And you see the same exact formation. Do you see this? This is hard to, like, if you're not familiar with it. And so this is the thing. If you saw this formation and then got in, golf clap. Well done. Well done. And then you can see a little left shoulder, right shoulder action. You could actually call this like a head and shoulders if you don't know what a head and shoulders pattern. Again, check out the videos. Pretty simple stuff here. Now, what is the thought process behind a bear trap, right? Like, well, think about it. Big round numbers. If you know you're not far from, say, like 200, for example, where do you think all the stops are on this stock? They're going to be below 200. Everybody who's been trying to skim the low here in the 203, 204, maybe 205s, they're all probably setting the stop at 200. Sneaky, 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 right? And that's what the market makers are doing. They're trying to release the liquidity. Now, what happens, again, as it's happening, you have to stop out. But after it happens and you start seeing the action start to turn around, this is where you can pick up. You can sell puts, because usually IB expands on a support resistance break, or you can wait and look for calls. But just remember that the IB can come in a little bit, so the price of the calls can come down. But if you're buying in the money, probably not going to have too much concern. And so what are the things that we talk about bull and bear traps is that they resolve higher, right? Like once everybody gets wiped out at the lows, the market makers absorb it, they want to mark it up. Now, obviously, the first resistance is going to be up here. You can see it pretty clearly around 228. I mean, bigger time frames. And here's your other one, around 215, 217. So I hope this helps with bear traps, because we saw this recently, and a lot of people, I still don't think realize why we're bullish. Saw the same exact formation on the SPY. Now, again, let me just open this up for after the fact. Same thing, right? You broke below it, you popped back up, you back tested it, and look what we're doing. We're making higher highs and higher lows off of what? The bottom. How high can we go? I've said, there's upside here. Now 390 maybe. Again, you can see better on the daily up here where all the moving averages converge. But do you see the power of bear traps? And this is the thing where a lot of people, again, are like, man, how are you bullish? How did you stay in this? How do you anticipate this stuff? And it's when something's oversold and pulled down, choppy action, trap, then it resolves higher. Now, again, how much higher? Again, we can debate that. You saw it here. You went from 409 up to 462, 50 S&P points, 50 from 350 approximately. Again, 390, 400. But let me go back to Tesla again, because this is centered around Tesla. But do you see how this is a similar formation? You see it's very, and again, different amplitude, but the same action. You look below and fail, right? I mean, if you looked at it on the hourly, it probably looks very similar to the SPY action, right? Where you come down, chop, you make a slightly lower low, and then you turn up. Again, this is stuff that you got to be on red alert with. And so if you got stopped out, stops are your friend. Because if this is the thing, like if this turned into an absolute dumper, and when I say dumper, like if you look at the monthly, you say, man, this could just be a big monster head and shoulders pattern. Well, yeah, at some point it probably will dump later, but not today. Not today, my friend. And so if you see that formation, and you were short too, it could have helped you stop out. So again, just trying to remember with folks, the market's just repeating patterns. You don't necessarily know the pattern until you're in it, but you're aware of it. And so if you stopped out for a tiny little loss after taking gains, and then you got back in, now you need to be aware that it probably is going to, at worst, retest this level, and maybe it goes up to here, 228s. And zoom out a little bit on the hourly. You can see some other points of control. I mean, nearer term. Keep that in mind. You can see one up here in the 243 area. I doubt we're going to get up this high, but you never know. 250, 260. All right. I hope this helps. This is the kind of stuff that we're always teaching. And remember, if you are emotional, you are up and down, you're watching your account balance all day, I promise you, without a doubt, trading gets a lot harder because it gets on emotion. But if you can be very structured, very non-emotional, don't look at your account balance. Ask yourself, are you trading well? Are you executing well? Do you see this stuff coming? Then it's no different. It's not that hard to do. It's just when you add the emotions, you want the market doing this, you read the opening headlines of China this, Xi that, Japan this. Remember, bear traps. It doesn't matter. Well, again, sometimes news can eviscerate all of that, but if there is no news, this is where it's like, man, Tesla is just climbing. And congratulations, because that if you learn these patterns and you see them coming or can anticipate them, or if you stop out and you can react to them, again, you trust your ability to stop out or mitigate losses, because you always realize, like, all right, let's just see what happens, because all it takes is one time of holding through this, and it ends up turning into the dumper, and next thing you know, 200 is 198, then 195, then 190. That's how you lose your account. So if you have any questions, again, check out the other Back to Basics videos. There's literally topics of everything. If you're studying and you need help, DM me on Twitter. I'm letting people into the Discord room when they're struggling. And not struggling like, oh, this is like too hard. It's just when the student's ready to teach your peers, like you got to be mentally prepared to do this for the long term. And again, if you wanted to be in a professional anything, there's a grind, there's a learning process, there's all sorts of, hurdles mentally. And so that's where a coach comes into play. And again, I've told people this, I don't charge anything because, again, I don't fear competition. I want to help people that will ultimately join the Discord room, and then they can be eyes and ears. And again, all it takes is 15 or 20 really good people who can do this, hanging out, watching the markets. It's amazing. So I appreciate everybody. Look forward to catching up. Please leave a comment, like if you're following. Again, it helps the message spread. Again, don't fear competition. Ultimately, you can give people the recipe for success, and 99.9% of them won't execute it. Like, again, if LeBron James writes a personal book, any of your favorite, I would say, people you look up to, or in sports or in life, the processes to get to the top are not easy. And that's the thing. That's why a lot of people sell books. They give away the information. Most of the people cannot execute because they can't stick to the plan. Let me help you with that. Let me help you help yourself. I'll talk to you guys and gals later. Bye. Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, your PayPal link is in the description as well. I appreciate your continued support of the channel.